Well, welcome everybody to today's very special edition of Discussing Markets. And of course, it doesn't get any bigger than this. We're recording just before the major FOMC decision out in the US, and it's going to be a big one. We know it's going to be a rate cut. How big? I'm going to guess 25 basis points. Tyrone, how many are you going to guess? 50, 25, 75? Some people have been saying. What's your guess before the event?
I'm only going to go conservative 25.
Okay. Yeah, all right. We're going to go with conservative 25 basis points. But
I think they've got to be pretty careful. They've got to be pretty careful. I don't mean they'll be doing anything too extreme.
Yeah. So welcome everybody. Landing, yeah. So welcome everyone. Right. Yeah. Today we're talking stocks. Of course, we're going to be talking the S&P 500. We're going to be talking everything to do with currencies and, of course, commodities, and more importantly, some metals as well, because there's been some massive moves since we've been talking last week about it. We'll go through market structure, volume profile, and so many other things. But let's get started with the S&P 500, because this is one that most people are probably watching. And it's a great day to talk structure, Tyrone, because markets love to set up in uniformity before these major events, hitting key resistance or support lines. And it's like no other. We've seen the same type of thing happen right here. And I thought I'd kind of just break down the US 500 to start off with what has actually occurred over the last 24 hours. The market's actually gone up. They've tested, you can see here, what I call a last small resistance level. And the reason I say that is because that's right around the all-time high on the real market during the market open trade session. And it's also the last kind of close price over here on the left-hand side. And you can see that we've hit that, and somebody was a seller there, Tyrone. So what happens here, it's probably going to be full of potential traps, and there's a real chance that we could see selling here, isn't there? And along with that, there is also a chance that we could do something like this coming into October. So where are the key levels? Well, structure tells us that, doesn't it? And we know we're at one right now. We know that all of this is key kind of resistance. And we also know that if we get underneath this yellow line here, then there's a good chance that markets may fall to the next level of structure. And this is what we call equilibrium to equilibrium movements, isn't it, Tyrone? It's a great analogy for thinking about markets. They move from their point of least resistance to the next point of least resistance, especially, and they can do it especially quickly, can't they, in news such as this?
Yeah, they certainly can. And I think it's a very common occurrence, Tom, just before really big news. It happens a lot. The markets have been going, they've been waiting for this really. Like the last few days have been almost boring, if you like, in terms of movement. But there have been structures that you can certainly have traded during that period, throughout, say, a US session. But right about now, I think there's as much of a case to make for the US going up as there is it going down. I'm not really biased to either move, to be honest. I think that you could definitely make a case for a break higher. We're at resistance, there's no question about that. But I wouldn't be the first person to that party. I'd want to see that resistance broken and retested from the top. But there is a very real possibility, and I don't think anybody would be surprised if the market did actually break up over 5,700 and then come back and test that from above. And I think that if it comes back and tests the 57 from above, that could be a really, really good launch zone for a very strong end to the year, especially going into November, Tom.
Well, let's break down here the October-November kind of run. Obviously, US election year, volatility set on the horizon for a little bit. As you said, could be a break up, then comes back down during the October volatility, then maybe does that traditional election, post-election run. I think the election's the 5th of November, so that'll be an interesting catalyst day as well for markets. Now, what I've done here, Ty, is I've put down two volume profiles, and this is one of the big discussions we'll be having today, talking about where are the most traded areas, where are the most important levels for us to be watching. And you'll notice here that I've highlighted this left-hand side. And the reason I've done this is because this was a very heavily traded zone before the market obviously sold off. And it makes sense that if it comes back to this level, we may see some reaction from there. And of course, what has happened is we have seen a reaction around this level here. And we have what we call like a kind of range-bound market that's now appearing that could be kind of trappy. And what this is telling us is that we're at that key level of breach. We're creating structure here. If we move to the downside, then we have to kind of believe that there's a real possibility to go to the next main structure zone, which seems to be around 5,500. If we move to the upside, as Tyrone said, we could go much higher and then pull back later on. At the moment, I think the key level to be watching over the next 24 hours is going to be 56.06. Do you have any other major level on the support that you're looking at, Ty?
No, I think that's right on the money. Pretty much where the five just above the pretty much right where it is now is very, very key. But I think a little bit of a pullback to that sort of, 5,600 strong. I think we're going to see 5,700 before the end of the week. I really do. I think it's not. I know it's not a big stretch. It's only 30 or 40 points, but I think that being so close to it, I think it will try and get there. Even the volatility prior to the announcement might even get it there just to touch it. I wouldn't trade it necessarily. I think it's probably one of those ones where this is probably the patience, react, and predict when it really comes into play, Tom. I know it's very. It would be very tempting for people to say, you know what, there's a really good chance it's going to go to a 5,700, which is a round number, all-time high prior to the news. Let's trade it. But along with volatility comes extended risk, right? That it can actually bounce off that level very quickly, take out a stop loss unnecessarily. There's volatility can and needs to be traded very, very carefully. It's not something that you want to be doing carelessly, if you like. So knowing that there's volatility ahead, especially in the next 24 hours, I would be very, very cautious. I'm of the belief that we're better off waiting. I said in this morning's stream, Tom, that, you and I both know what happened 8 years ago at this time when Donald Trump got elected as the president. The market went on one almighty run, and it never stopped. Now, again, we're not at a level now where we're going to see 2,000 points rise from here, right? Like, I'm not saying we're going to go to 7,000 before the end of the year because of a new presidency, but there is that sort of volatility potential in the space of about 7 weeks from now. So I think that we need to be a little bit cautious on the positions that we place. But we are at a very, very key level now. There's no question about that. I know you got the NASDAQ going on there. I've got that exact same line drawn, actually, funny enough. So it's interesting, that's for sure.
Yeah, so we're talking synchronization here. Obviously, market structure again, key level on the volume profile being reached. This is actually a volume profile zone. Again, you need to pull that range so you can get that. Downward trend line, as Tyrone said, he's got that one drawn as well. You can see the reaction off that. And the reason I'm bringing these all up is because what you're seeing here is everything hit resistances and key levels right around the same time. There is our resistance that we had for the Russell. Here is our oil resistance, the daily 20 moving average, which we spoke about last week, actually, as we start to see recovery in it. And of course, we made that just before the event. We then move over to something like a silver, which gets very close to our first TP zone, where we've been very bullish silver over the show over the last couple of weeks for a lot of good reasons as well. I'd encourage you to go back and have a look at some of those so you can see the structure, because I think last time we were talking about this was, we spoke about it, quite a while ago now. It's over here, Wednesday.
Yeah, quite a few times.
It was Wednesday the 11th. It seems like an eon, but actually it's gone up a lot since then. I forgot how much it really has been, how long it has been since we last saw you guys last week. But yeah, silver's gone up a lot. Obviously, we got that gold breakout as well, which was significant, which seems like 3 weeks ago, but it was only just last week. And all of these things were things that we talked about in terms of structure. So we had that coiling market structure. We break to the upside. It's going to be an aggressive move. And of course, it was very quick and very fast. And it may be repricing itself towards 2,600 and possibly even 2,628. So what I guess Tyron and I are getting at is we hit key levels just before these news events. Same thing with Tesla. This is an amazing structural zone, 230. We can see this on the charts here, how big this key resistance is. And the reason you want to know these is because, of course, if they're broken through news, and let's say Tyron's correct and we continue to move up, there can often be quite large thrusts that come off this news. So it can break, it can close, and it can continue to move for a few days in that direction. And that is one of those patience, react, don't predict kind of reads. We don't know the move just yet. We could speculate towards the downside if you're looking at the stats and the history, because, of course, we know the last 4 rate cuts actually have ended in negative weeks. So they've ended up being negative over the next 5 days, but that doesn't mean it's going to happen again. Just because it happened over the last 4, that's not exactly a great sample size. So that's something that you might know from the statistics. But until you see the price action really showing that, all we can say is we're at an absolute critical level of resistance. And that's pretty much across any asset class we're looking at right now. And they're all doing it at the exact same time.
And I think it's really important to understand that just because the market should do something and react positively to a news announcement, it doesn't mean that it's going to. And quite often the build-up is actually more exciting and volatile than the actual event itself. It can turn into a very sad, cumbersome move, actually, sometimes after what should be good news, it can be seen differently. And as an example, right, let's just say that the market or the big players in the market affected in a 0.5% drop instead of a 0.25. If we get a 0.25, which is still good for the market, it's let down, some big players, and all of a sudden, well, you know what, that's not as good as we thought it was, and that could be enough to actually send it down when everybody's expecting to go up. You need to trade news with caution. It's always the way. Like, you've got to be. I'm a very, very big believer that these are the situations where waiting and seeing for that momentum to start moving in your direction. There's plenty of room on the way up, and there's plenty of room on the way down to make the money. All you need to do is actually let it get its direction right, rather than trying to predict its direction and join the existing trend. And I think those words are probably the best advice that I think that we can give you in times of when potential volatility is coming, because that's going to give you the safest and the easiest path to profitability. Trying to predict where news is going to go. We gave that up back in 2007, didn't we, Tom? Like, it's not. It's not something that you want to. You don't want to be practicing or allowing that to creep into your trading, because that can have very dire effects. And we've said it in the past, and I think it's probably not a bad time to just bring it up again. Sometimes actually getting the direction right and getting a win can actually be worse for you than actually taking a loss, because it gives you a false sense of being able to read the markets, Tom. And that false sense of security can bring you undone in a far bigger way down the track. So sometimes actually getting a win is actually worse for you than actually taking a loss, because it will give you confidence that you probably shouldn't necessarily have, because you were probably a little bit lucky. And that's the truth of it.
Yeah, so it brings us to now the prediction potentially behind this one, Ty, because of course it started to break early. Now everything else has been sinking pretty well. The dollar index, and we've got a question here from Michelle about the euro US dollar, which of course we'll answer. We'll do some currencies here tonight because of course a lot of the other markets literally are at resistances or supports. But here is the dollar, and it actually broke early towards the downside. Is that a precursor to us, Ty, considering the trend has been quite negative? I mean, effectively, we have had here a series of lower lows and lower highs the entire way through. And you'll notice here the 20 moving average, which is, of course, one of our favorite moving average indicators, 20, 50, 200, guys. Make sure to have those on your charts, has been respected on the way down. So I think it's pretty clear we're in a downward trend. What are your thoughts here, though? Are we going to 99.50?
That's a really good question. I love this level. It's really, I think the move up to the 20 moving average was just the easiest trade of all time. The move back down to the 160 level was also a really good move. Then, look, it's a double top in the direction of a very heavy trend, right? So if we do get a break of what is effectively a neckline at around that sort of 160 area, it proofs itself all the way down to 99.50. So we love proofing patterns. There's no question about that. We measure the distance. 99.50 is where that pattern will fulfill its destiny. The time is now to hold up for the dollar index. If it fails here, if we see a daily close, somewhere in the vicinity of sort of 140 or some or worse, I think the chances of going to 99.50 increase significantly, and I think it's probably a reasonable expectation that will happen. That said, though, it's got a roadblock in front of it right there with the 20 moving average again. We must remember that we are in a very, very heavy downtrend. There's no question about that. And this pattern is a proofing pattern of a continuation in a very heavy downtrend, and they're generally one of the best patterns. If we weren't at an extraordinary level of support, I would be a lot more confident in this pattern. But you don't have to go back very far to see very, very heavy support at this level. It's a very tightly guarded stronghold, if you like, for dollar strength here at around that sort of 150 to 160 zone. it's going to be very interesting. But a break below it, and I think, I think you're right, Tom. 99.50 would be a very, very reasonable expectation. Of course, that's going to equal a move probably up to about 112 on the euro, I would have thought.
Yeah, so let's have a look at the euro combo versus that then, and let's load up that. So basically, when we're looking at the euro, it's pretty clear that it's doing kind of a little bit worse than the dollar index. I mean, really, if this was actually trading like the DXY was, it should already be at those highs. So yeah, definitely weaker on the charts in terms of overall action. And the reason why is because we're in basically a central bank cut fest. We saw the ECB do a cut. We obviously are seeing the Federal Reserve now make a decision on a cut, and this could have profound implications. I think a lot of people, I've seen a lot of market pundits going for the 50 basis points, Ty. So again, if that happens, and let's say we go 25, I think it's going to be 25, but anyway, we'll see. So if it goes 25, the soft landing narrative continues to hold up, then maybe that's going to actually scare the market and upset them, and therefore the dollar may actually go up, as you said, counter to what a lot of people are going to think. So here's the euro. It's fairly bullish. I would say if we were here in market structure, so on Thursday of last week, when we broke past these wicks, I would say it's quite bullish in structure, very bullish in structure indeed. Then we went to the next level, which is 1.11. And now we're above that area. You would have to say the market is trying to get up. If you were having to pick a directional range, you would say it's more bullish than bearish. The problem is sometimes ahead of these events is we're right at critical zones. And because we know what we're doing, because we're looking at a cross currency, so we're looking at the dollar index to give us guidance for the euro, it's very close to call on the dollar. If we had to pick a direction, we'd probably go negative. Why? Because the dollar is more short than it is long at the moment. But we do also know that this has been where we've had astronomical trend changes. And for you, Ty, just to clarify before when you said on the dollar, will you be, I just had here the daily, and I'm just going to put on a volume profile here because this is a good example of market structure. See how there's a lot of trade around here, guys? So if we managed to actually close above the daily 20, we would be breaking the sequence that so far has held this market down for, 500, 400 points. Yep. So if that happens, I would say it's actually beginning the change of trend towards the upside.
It would be a very, very big deal, if that happens.
Yeah. And that's possible to happen over the next 24 hours. It is. It can happen for sure.
Most definitely.
Yeah. And that would change everything on the euro, of course, to a more negative stance. So that's why Ty and I are saying, you know what, the problem with sometimes doing a live show when you're looking at structure, and we can go back and look at some other history targets, is that when we're ahead of key resistance or key support, right onto probably, well, even maybe arguably the biggest decision of the year, Ty, when it comes to economic news, it's going to be tough because you want to be ready for both examples. So in this example, getting above this daily 20 would be huge. Getting below this wick down here would be huge. That would then create a momentum run that's very possible to go to 99.50. If we get above this level here, we could have a momentum run that really breaks up and goes towards 103. Would you agree those two scenarios become the most likely, Ty, in terms of breakouts?
Absolutely. And I think both of them, I haven't even got a bias to either way. I think I'd be happy to trade both, to be honest. I think there's a very strong case to be made for both of those moves. And I like those trades because either way, we're going to get some action. Sometimes there's just a move that you want it to break one way, and if it goes the other way, you're not going to be really interested because it doesn't make technical sense. This makes technical sense on both sides. So I love these sorts of moves. Look, I'm still, the reason I'm a big believer that I think we're only going to get 0.25% is because there's no need to go 0.5%. Like, why would they want to shock the market? It doesn't make sense. Like, it really, they want a soft landing. Like, if it's going to be, they can cut another quarter next month. It's not like they have to make everything, it's better to, if I was in charge, Tom, it'd be getting 0.25%. Let's just say that. So I would like to think that logic would prevail. I don't think there's any need to shock the market. I don't think anything is that dire. So maybe that means that the market's going to be just disappointed. That's the problem. Like, they're expecting 0.5% for whatever reason. Maybe that will be the catalyst for a little bit of weakness.
I wanted to read this quote, Ty, and I just thought I'd go over quickly to our YouTube, to our X here. And it says, this is a great one. The stock market will do whatever it has to do to embarrass the greatest number of people. Walter Deemer. I agree. And that's exactly what you're getting at. It's a quote that it kind of rings true at times like this, because of course we have, so many key things going on in the markets, but at the same time, they shouldn't be shocking it. There's a narrative out there that's soft landing. In fact, there's a chart that I shared today that has, I think it's like 85% of the overall people believe soft landing is the greatest thing at the moment, and then the rest basically believe no landing. So the hard landing narrative is almost out of the market. So if they're going with the soft landing, should they really be cutting 50? Probably not. Now they may. I mean, we don't know, and that's why we don't bet on these things this way. But instead, what we do is we follow the structure and we follow the flow. And you'll notice Ty is neutral. I am also neutral here in this position, and I'm looking for the stats and looking for the evidence to support either argument, because you have to be open to either argument as a trader. It's such an important one. Stuart says, love that quote. Yeah, I like that quote as well, because obviously people are going to have strong opinions today about what the market should do, but we should actually instead look at the structure. Now, I've got a chart up here, Ty. It's silver. The reason I brought silver up, and there's a lot of arrows, and you're probably thinking, what the hell is this? What am I looking at here? Well, down the bottom, this is the beautiful thing about having your Pepperstone platform connected with TradingView, is you can see down here we have the Federal Reserve cutting cycles and what happens when they start to cut. And actually what I've noticed is that when they've cut over maybe the last 6 cutting cycles, specifically, it seems to be a bit of a catalyst for silver trades. And it could also explain, well, we already knew this ahead of last week, but it can explain why silver already has started to move. But what would happen if silver broke that first major zone? Well, there could be a good chance that momentum will start to come on side. And Ty, we've talked on this show a little bit about the 1-2 system, the idea that markets will often come back to a moving average, obviously the 20 usually, on some kind of time frame, and they will find that as dynamic support or resistance. And if it goes 1-2, the 3rd, the 4th, the 5th, the 6th, the 7th till it breaks could be an interesting way of getting into the trade. I know you've used that before. I've obviously used that before, but these are the types of profound understandings that are really worthwhile starting to think about when you're dealing with this massive news. Leave your opinions at the side, and instead, what does the hard data say? In this case, the technicals are pointing towards that. Interesting stuff. All right. Well, let's just quickly get back over to some other pairs, and we're going to just look at some random currencies here, and we're going to start with the odd US dollar. And the reason we're going to do this is because I know it's moving a little bit right now, because I had a little alert for it. And what I want to just kind of do is break down the way we would kind of start to approach structure. So I think, most people don't look at monthly charts, even though they might be day trading, scalping. You might say, why would I look at a monthly chart? You've got to put yourself in the mindset of a larger investor and trader. They're going to be trading on the higher timeframes. So over here, we have a kind of resistance structure that you can see, very, very clear resistance structure in the markets where we're seeing multiple resistance points. And this might be kind of the level that you may want to actually have on your charts. And you can label that up as whatever color you want. I was going to make it blue here. Now, you'll notice that recently we came up to that level and we found a bit of a rejection. We then came down to Tyrone's favorite, which is a 20 moving average. We came down to an anchored VWAP, which is this green candle or green little line here. We found buys. So if we then went to the daily, what you might notice down here is we get a change of trend probably on the smaller time frame. So let's have a look at the 2 hour here. And we certainly do, because what happens on the 2 hour time frame is we go from basically a market structure, which is low into high, into lower low, into higher high. And this market structure here is a huge deal. When we see that switch of trend, we see that effectively lightning bolt towards the upside, then this tells us that something has changed here. And this was happening at a weekly 20 moving average, an anchored VWAP, changes trend around that level, previous market structure demand. All of these things start to play out, and you're starting to build a level of confluence. And of course, you can see how that is now traded onto the upside. So if we go back to the daily here for a moment, you can see the strength that's coming through on this Aussie. And why is it finding strength? Because it's trying to approach this level, which we know already is a weekly level, and it's doing it before the news. So it's trying to get up there so that it's ready for that news to potentially either pop above or find it as resistance and sell back off. And again, this is the synchronization of the market that we're trying to get to, that overall structure. 24 hours ago, the Russell wasn't at 2220. Now it is. But the S&P 500 just kind of floated around, went up and down all around. The NASDAQ floated around, went up and down. The other markets have all connected to these levels. Very, very cool.
I think it's awesome.
Calvin says,
and I think it's really why we look at the bigger timeframes to make sure that we can see the structure is actually taking place. Giving you, it's almost like having insight and not using it to your best ability if you're not looking at different timeframes. Like you got the ability to actually see what potentially can happen with momentum and ignoring it.
Yeah, I would actually like this week, Ty, because we're talking market structure and other things, for people to also ask some questions. We've got quite a few people here live. Make sure to ask some questions in the chat. We're going to answer them right now. If you want us to analyze something, look at structure, look at a breakdown, what a great education session it'll be now for the next 10, 15 minutes so we can go through that. Calvin says here, is that an inverse head and shoulders on the Aussie 2-hour time frame? Well, you have some eagle eyes there. I'm going to say yes, it already is. And you can kind of tell that there's going to be some form of structure there because remember, patterns happen like this. You've got your left shoulder, you've got your head, you've got your right shoulder. So you are correct. It's kind of synchronizing and trying to break to the upside with that overall pattern. So here's your left shoulder, here's your head, here's your neckline, here's your head, here's your right shoulder. And of course, you're breaching through that. And you can kind of see here how important that red level is that I already had marked on the charts. And what's happening now is it seems to be front running the news, but I wouldn't necessarily trust that because we know this is a major problem. So it's just syncing up with the rest, getting towards those critical levels. And you'll notice that when you look at the right-hand side, there's not too many moves here today in the futures because they're all getting ready for that big news. They're all sitting there creating structure with large people positioning in the long and large people positioning in the short. So feel free to ask some questions now, guys. Submit your questions and we'll answer them as we go through structure. Tyron, do you have any particular chart that you want to look at with maybe a chart of the week that you thought was really interesting this week or do you think is possibly
I'd like to look at the US dollar. Yeah, the US dollar yen is the one that
I knew you'd do that. I knew it, guys. I knew it straight away. I knew the US dollar yen. I was actually going to say it before you even said it. We didn't prep this.
but this is my baby, and I didn't want you to take away my from my baby. Yep. So look, okay. I think it's found its special little spot. We've got a morning star pattern on the daily, which is quite a big deal.
Can you walk through the morning star for people?
Support. Absolutely. If you want to zoom it right in, we can see here there's it's a 3-candle structure. We can see obviously the first one is still a pretty reasonable long range red candle. The next one is what you could call a doji candle or a dragonfly doji if you like. There's many names for it, but what it effectively means is a candle where buyers were not in control for the majority of the period, but regained a great deal of control before the period was over. And then, of course, we get the big green candle, the big long-range green candle that overwhelms the previous red candle that we saw that started the pattern in the first place. It's a very important, it's rare on a daily that you actually get very clear patterns like this, especially at a level of very, very strong support or resistance. This did both. Okay, so what we want to see for this pattern to play out, obviously, engulfing candles. Okay, we want the doji or the dragonfly or a shooting. I mean, you can call it a hammer as well. The evening star will have a shooting star as that candle instead. The evening star is the complete opposite of this, of course, right? So you're looking at a move at resistance where you've got the opposite. But this is a really, really good morning star pattern at a place of support. A very important place of support on the yen. Now, what I like about this trade is that there's still a bit of room to get to the 20 moving average and still a reasonable amount of a 20 moving average on a daily, that is, and there's still a reasonable amount of pips to get there. So yeah, we're currently trading at around sort of 141.5. You're basically talking about 200 pips from here to the 20 moving average, which is not a bad move. It's been a big, big sell-off. There's no question about that. But if anything's going to reverse, one of the most aggressive trends of 2024, which was the fall of the yen, it's normally going to be something of the caliber of a morning star on a daily at very strong support. So I'm watching this with a great deal of interest. Any series of higher highs and higher lows on a 1 hour time frame or 2 hour time frame, and I would be looking at getting involved and trying to get a couple of hundred pips out of that to the 20 daily. That would be my trade for the week.
And this, by the way, for Calvin also has a full-on inverse head and shoulders at the low there, which actually was also creating with your star pattern. So yeah, I mean, it's quite a few things going on here. We've got trend lines, we've got stars, we've got the potential of the 20 moving. You'll notice that's also the major structure zone here. So let's use one of the indicators that we're talking about in today's session, which is obviously the fixed range volume profile. I'm going to pull it across here, and we'll notice that we've come to the most traded zones. This is the most traded throughout this structure, but the TP zone also is the value area high. Now, that's important because what the value area high and the value area low are, which is this blue line here and this blue line here, they're basically where market has held. That's the market range of 70% of the volume for the area we've highlighted. So effectively, this is the most traded zone, sure, the red one, but this is the high and this is the low of that structure. So remember, when you're putting a volume profile on, what it actually is showing you is it's showing you where if you took away all the blindingness of the wicks and the big moves up and down and everywhere, it actually said, well, where is all the trade going? This is 70. This is 70% of all the trade volume. I don't know if you just saw that, but I think love hearts flew out when I said that because of the tool we're using.
Why did you get love hearts?
There were love hearts. Were there love hearts, everybody? I think there were. Well, we love structure. So, I don't know what that was, but anyway.
You didn't make that happen.
So I did make that happen. I would like this, and I would have done it. There we go. So we do love structure. We do love structure, and this is the area that, of course, we want to be focused on, because the value area high has a lot of quality. So look at, he's trying to do it. Look, it has a lot of quality as well on the chart. So it's not just the POC, which is what most people focus on in volume profiles. It's the value area low, the value area high, and you can see how this synchronizes with some of our other ideas before. Stuart says, there's a question here. Let me just quickly read it, Ty, and see if it's valid for right now. We will quickly go through this. The apples and the kind of other stars, the stop signs, are actually an indicator that we have in one of our courses. I just use them for oversold, overbought, Stuart. So it's a good question, but yeah, that's what they are. So I have them on the charts just because it's another way of kind of recognizing potentially oversold or extreme overselling. So as Tyron said, we've got an extreme oversell. We know that because we can see it on the charts, but that's just another way of being able to recognize that. And of course, what ends up happening is we've got the star here, Morningstar stuff. So we're basically also seeing that strength coming back into the markets. Another question here, Ty, from somebody that's just basically saying, can we have a look at a pair that we haven't looked at in a while, which is the pound yen. So the beast, as we call it. And the pound yen is, I think, a pretty hard trade at the moment. Again, oversold. When I look at this chart and I compare it to the US dollar yen, instantly I'd say the US dollar yen looks better. Ty, do you see any differences there? I mean, the downward trend line certainly breached through, which is nice. But these are all showing that whatever it is versus the yen seems to be a strengthening kind of pattern on the small timeframes.
Yeah, I think, look, if you're going to go to the smaller timeframes and scalp it, I mean, you got to take into consideration here that we had a series of lower highs and lower lows that were very pretty, if you like. Then we broke above the 20 moving average, and now it's made a series of higher highs and higher lows. I think a break above 187.50, and yeah, I think there's a reasonable expectation that you could probably get to the 190. But I think that really goes in sync with what we just talked about on the US dollar version, really. Right. So which is the better trade? If what you want to avoid, trading the same thing. We used to call it basketing in the day, where you'd be trading effectively the same expectation. And by that, it might be a yen basket where you might trade 5 or 6 different yens. You got to be really mindful when you do that the risk management can sometimes go out the window, because one fail, all fail is quite often the case there. So really, we're big on picking your poison. Look at the one that looks the cleanest, the one that looks the most likely, and that's the one you probably should be trading. But yeah, look, it would that move would equal something similar to what the dollar version would do.
I thought we'd probably end the show here, Ty, where we talk about the Hang Seng, because this was just another case of using volume profiles to your advantage. So what you'll notice here is we have a market that was coming downward. It was getting pretty nasty. It went bullish, which is cool, and then it started to pull back. And of course, a lot of people say, well, where should I be buying? Where should I be looking at? Well, if you'd done a volume profile again of the range previously, you'd notice there is a massive outlier, this level here. And this between the value area low and the point of control seems to be a very critical level in the markets. And that's exactly where the market's gravitated towards. So if you're a day trader or a scalper, this, of course, would be a level that you would look for change of trend. And you would start to say, oh, okay, well, if I'm looking for buys, I could look here. And I think whenever you eyeball this, you're going to recognize when you've done TA for a while that it's also going to be a major fib, such as the 61.8 fib. So all of these things lining up, remember, Tyron and I always say the same thing. It's not one thing that ends up, creating a great trade. It is building a confluence story of multiple different tools that are giving you edge. And once you start to do that and you ultimately use trading technical analysis tools, and the reason I bring this up is because I knew this was here, you can start to create it. Now, today we've talked about the volume profile. We've talked about structure, key levels before news, actually monumental stuff. But also we talked about the 1-2 system. Have a look here. 1, 2, 3, 4. This is 20 moving average 2 hour, one of my favorites. Down, hits key level, which we know on the higher time frame is big, breaches up. That's a change that we didn't see the whole way down. So something's happening here. Meanwhile, we know it's where if they're going to come and buy the market, that is the street, the algorithms and everything else, this is going to be the area of the level. So we've just used two really basic systems, a moving average and a volume profile. And we've recognized a change in a pattern, a change in flow. And I bet you if you started to aggregate a whole bunch of different tools together, you would find that this level is actually incredibly good. And it just shows you that trading doesn't have to be hard, but instead it needs to be strategic, it needs to be planned, and you need to use higher timeframes to activate your smaller timeframes. And I think if you take that away from today's session, whether you're watching this in a video or you're watching anything else, then you should be looking at it. Stuart says, damn, this is straight out of your day trading masterclass. It's good stuff. Yeah, this particular area is in there because it's replicable. But this actually has multiple replicable approaches. And you could look at this on a silver chart, and Ty would say, if you threw this and it was Bitcoin, or you showed us this and it was BHP here in Australia as a stock, in every case, Ty, it wouldn't really matter to you what the chart, what the particular instrument was. It's still a good trade, isn't it?
Yeah, the symbol means probably the least amount when you're looking at a chart, really.
Yeah. So some good stuff there, some great questions coming in from a few users. Thank you very much for watching today, guys. And also join us next week because, of course, what this FOMC event's going to do, and I know it looks like there's not much going on here, is it's going to create volatility. October is going to be more volatile as well, according to the VIX. So the volatility index is set to possibly spike, according to the futures market options kind of flows, where they're going to see November 5th, which, as Ty said, 8 years ago when Trump won, that went ballistic during the day. I remember it got absolutely hammered during the Asian session. Then it went ballistic to the upside and ended up going on like a 400 or 500 point run on the SPY. It was pretty wild. So we had some massive moves off that. And then you start to see the ramifications of this cut as well into market structure. So the next particularly 1 to 3 months could be some of the most monumental trading. And I don't say this very often. It could be some of the, not maybe even in terms of volatility, but could be some of the most important trading to define the next 9 months. And then the next 3 years, if you stick around in trading over the next 3 years, you better get ready for some extreme volatility because I think it's going to be an absolute bonanza over the next 3 years as traders move into probably one of the most uncertain times ever in history on markets. And this is going to only create better day trading, better swing trading, and of course, better opportunities. So thank you so much for joining us here today, guys. We really appreciate it. We hope you had a great session. And quite a few of you are saying you did. And of course, we would love to see you here next week. So if you're watching this in the replay, please make sure to sign up. Links in the description down below. And yeah, we would love to see you at these live events. Also, Ty, you've got a quick reminder just for people if they're interested in attending as well.
Absolutely, yeah. We've got our live event coming up in Melbourne. We've got 2 live events coming up actually in Melbourne and in Sydney. So yeah, you certainly want to join us at either of those 2 events where Tom's going to take us through the next 12 months and basically going to forecast and tell us where to put all our money. So very, very excited and looking forward to that. So.
I'm going to show you some stats that will be very interesting, though. That's for sure. And of course, if
it would be a great opportunity to meet you. Absolutely.
Yeah, would be a great opportunity to meet you. So, of course, we're doing those in Melbourne and Sydney. So if you're interested in coming along, you can find out more information, I guess, if you just have a look at FX Evolution on YouTube. You can look at the links in the description of the latest video, and you'll check that out. All right, guys, thank you so much. We'll see you next week. Bye for now.
Thanks, everyone.